So I'm going to go ahead and pass it over to Keith. I'm sorry, Keith. I'm so sorry. Keith Stevenson from IAPA is going to introduce our speakers from the Small Business Administration.
Thank you, Rena. Good afternoon, everyone. My name is Stevenson, and I'm IAPA's newest Director of Public Affairs for North America. Thank you for participating in today's webinar. Your participation likely means that your organization is currently utilizing the COVID EIDL loan program, and you are interested in learning about how recent program modifications can help your organization. Please introduce the following representatives from the Small Business Administration who will educate you about these changes. Veronica Poheen, Senior Advisor in the Office of Capital Access. Isabel James, Special Advisor, Office of the Administration. And we may also be joined by, and I think we actually are joined by now, Patrick Kelly, Associate Administrator in the Office of Capital Access. They will also field your questions following the presentation portion of the program. With that goal in mind, feel free to send your questions at any time during the presentation, which we'll review and sort for efficiency. Before I turn it over to the presenters, I did want to ask you if you are interested in receiving our weekly public affairs update that addresses important topics like this on a weekly basis, please send me your email and acknowledgement at kstevenson@iapa.org. That's kstevenson, STEPHENSON @IAAPA.org. So now let's turn it over to the presenters, and thank you again for participating in today's webinar.
Great, thank you. Appreciate the time to be with everybody here today, and we'll be going through this PowerPoint presentation, but I want to encourage people to put questions into the chat, and we'll be able to answer those as we go, and pause periodically throughout to address those, and hopefully this will be an opportunity for you to get the issues that you want addressed in real time. And then obviously any questions that we don't get to will be shared with the SBA, and we'll make those available through your trade group, after the webinar. And I believe the webinar is being recorded and will be posted, so you'll have it as a resource. So today we're going to talk about the COVID EIDL program, which has been in existence now for too long, obviously, because the pandemic has been around for too long. But obviously, it's a great opportunity and tool. And Administrator Guzman has made some updates to it so that this hopefully serves as an additional tool to move from the emergency phase of the pandemic into the recovery phase. So if we move forward one slide, I'll kind of give the overview. So I don't know if Anna or I'm not seeing the slides, but are you, I guess Anna or Isabel or
can you see that?
No, I can't, but I don't know if others. I can see me.
Let's see.
Maybe you too, Patrick.
Quite a sight.
Is that showing?
No.
Anna, it doesn't look like you have anything sharing. So if you go to your share in your drop down and select your presentation and then click on the play button. Right now, we're not sharing any slides.
I'm hitting play. It's not showing. Let me see.
But I'm gonna let's just reset real quick. Okay, I'm gonna give it another shot and see if we can bring it back up.
I see the option. It's saying that another window on the top of this is my shared application. Please move the window to resume screen sharing.
Do you have the webcams open on your window?
I believe I do. It's showing up for me.
Do you have a Teams window open possibly?
Nope.
Oh, there we go. You might drag your control panel away from, or make it smaller. That can help sometimes too. But we do see your slides now.
Okay.
Yeah, I think the challenge you have now, Anna, is this deck is the second deck.
I know. Give me 1 sec. I'll pull up the right one.
Mm-hmm.
Can you see that?
No. Yes. Now we can see it.
Okay.
All right. Thanks. All right. So I want to talk a little bit about is the changes that have been made to the COVID EIDL, as well as some of the things that have not changed but are really beneficial to small businesses right now, particularly those that have been most impacted by this pandemic. So the terms and conditions for COVID EIDL loans. So while this loan is not obviously a grant, it's a loan. It's not forgivable, but it does have really favorable terms in terms of a debt instrument. It's a 3.7. Okay, the deck dropped again. All right, I'm just going to go without the deck then. All right. Okay, so I'm just going to do this without the deck then. So the COVID EIDL loan program, the terms for the program are 3.75% fixed rate over 30 years. And one of the recent changes that we've coupled with that is to have a 24-month deferment period. So if you've previously received COVID EIDL and it was for an 18-month deferment period, we would automatically increase your deferment period out to 24 months. What that means is you're not required to make principal and interest payments until month 25. And then you have 28 years remaining to make repayment on the full loan amount. There are no prepayment penalties over that time. And this debt itself can be subordinate to other forms of debt. So what does that mean? It means that you have existing debt for which your bank or fintech or other types of lenders want to have first dibs on your collateral in the event of your business filing for bankruptcy. And ordinarily, lenders want to be in that position to have first rights to recover any remaining loan amount that you have not paid back from the liquidation of your collateral. But in the case of us, our program, we will be subordinate to them. So, and the combination of that principal as well as the 24-month deferment period means that other lenders can partner with you in addition to this debt. So your existing debt can coexist with this. You can go out and get new loans, and we will subordinate to those new lenders so that they can be in first position, which is the position they want to be in, and you still have the time to repay this loan in case they do not want to refinance this loan into their loan. So 3.75% fixed rate for the next 30 years, no principal and interest payments for the next 24 months, essentially, for a new loan. And the loan itself can be subordinate. The next key change to this program is allowing for the proceeds to be used to prepay commercial debt and to make payments on any existing federal debt. So if you have an SBA loan, perhaps an export-import loan or a USDA loan, the proceeds of this loan can be used to make ongoing principal and interest payments on that federal debt. So, for example, with a 7A loan, the typical variable interest rate right now for that particular product is prime plus 2. Prime is currently at 3.25%. So if you add 2 to that, you're at 5.25%. So obviously, this loan is interest is at 3.75%. So you'd be able to swap out debt that's more costly. In my example, on the 7A debt with cheaper debt. On the commercial side, if you have 6 months remaining, 2 years remaining, perhaps longer on a loan that is not a federal debt, you could accelerate payment of that loan with the proceeds of this loan. So a conventional loan is typically more costly to you, meaning a loan that you get from some other type of lender, and so the proceeds of this can be used to swap out that debt, and so now you've paid off the more expensive debt, and you're left with paying back the debt at 3.75% over 28 years. Typically, normal loans outside of the federal arena have shorter repayment periods, and that's what makes them more expensive. It's not necessarily the interest rate, although it's likely higher than 3.75% for you, but it's also the amount of time you have to repay. So we've provided flexible use so that you can prepay commercial debt and repay federal debt. Let's go to the next slide. So in addition to having a 24-month deferment period, the ability to prepay commercial debt and make regular scheduled payments of federal debt, we've also simplified the affiliation rules by taking the rule from the Restaurant Revitalization Fund, which simply states if the operating business applicant owns 50% or more of another operating entity, must list it as an affiliate. That's different and easier to document than the typical SBA affiliation rules, which typically require of you to show any owner of 20% or more that owns 50% or more of another entity needs to list that as an affiliate. So the change that we've made is the operating entity business applicant. So, John's Pizza Shop has to own 50% or more of another operating entity to list that as an affiliate. So it's a much simpler rule for listing affiliates. For purposes of this program, we have also identified NAICS codes, industry segments that have been uniquely impacted by COVID-19. And we have allowed, similar to the PPP program, for those businesses in those industries to demonstrate that, to qualify for the loan and be eligible if they have less than 500 employees per physical location and no more than 20 locations overall. So what you can see that we're doing is taking some policies from PPP and from the Restaurant Revitalization Fund and applying them more broadly to all other industries in relation to how the COVID EIDL program is administered. So for folks that have separate EINs on a per location basis and likely applied for several PPP, applied for multiple PPP loans as a result under each of those EINs, because under those locations you file separately, you'll be able to do the same thing here. You could potentially have 5 locations with $2 million each, not to exceed an aggregate amount of $10 million. So maybe I'll just pause there and see if we have any questions in the chat just on any of the materials I've covered thus far. All right.
We got the questions covered so far.
Okay. All right. Let's go to the next slide.
Yeah.
All right. So just to recap, so we're talking about loans that can go up to 2 million now. So you can seek amounts in excess of 500,000. There's a 24-month deferment period for all loans, which has been extended up from 18 months. The minimum credit score for amounts in excess of 500,000 is 625. And for the amounts less than 500,000, it's 570. For the amounts in excess of 200,000, any owner of 20% or more needs to provide a personal guarantee. And for amounts that are in excess of 500,000, if the business itself, so in my example, John's Pizza, owns business real estate, then we'll take a lien against that business real estate. That does not mean that the owner of John's Pizza may have a personal residence. That does not need to be pledged. In addition, none of the 20% or more owners, although they'll have to provide guarantees, they will not need to pledge any collateral. It's only the business real estate. If a business does not have any business real estate, that's fine. You are still eligible for this program.
I'm on this webinar that I found set up.
And then,
Okay.
and then,
Patrick, I'm sorry. Excuse me for one moment. I just want to address attendees. If you're listening to this, can you please make sure your audio is muted?
Yeah.
all right. Yeah. So we can go to the next slide. All right. So this is just a bit about the required documents. So for all loans, you need to provide your 2019 federal income taxes, and you'll authorize us to pull to validate those tax returns with the IRS form 4516.
Here, give me your best.
The P0 2022 or the P022 form is, that really rolls off the tongue, is the standard resolution. That means that you are able to seek this debt on behalf of your business, and your board has resolved to do that. So that form is necessary. You have a schedule of liabilities. That's a listing of any existing debt that the business has, including any federal debt. If the business itself owns any real estate, you'll have a list of any real estate owned. And then for owners of 20% or more, they will fill out a SBA form 413, which is the personal financial statement. In terms of timeline, for amounts that are in excess of 500,000, you can expect the process time to be somewhere between, when the application is submitted, you can expect it to be about 6 weeks. For amounts less than 500,000, from the time the application is submitted, it'll be about 3 weeks until the loan is approved and dispersed. Let's go to the next slide. All right. So I'm going to defer to my colleague, Isabel James, to just kind of walk through some of the resources that are available and just let her speak to this slide.
Sure, absolutely. So as Patrick has referenced, we have recently updated our website with a lot of resources that we think are going to be really helpful to applicants, both in understanding the program changes and also completing the application. So we'd really encourage you to go to sba.gov/EIDL to take a look at those resources, just to run through them quickly so that you have an idea of what is on there. If you go to sba.gov.EIDL, you want to click on the COVID-19 EIDL page. And in fact, I can, it's easy for me to take over screen sharing. I can walk through this live, but otherwise I'll just talk through it. Let's see. Are folks able to see my screen?
Yes, we can see
Yes.
your screen.
Do you see the right page?
Yes.
So I'm going to click on COVID-19 EIDL, learn more. And if you scroll down this page, we have a lot of information that I really encourage you to look through. It's going to make your application experience a lot easier. So you can see the program updates are towards the top of the page, and you can click on a link here to see the deck that Patrick has just been running through in case you didn't catch every word and want to reference back to it. But some of the other resources that we have available, we have an FAQ up here that has a lot of information. I think it's going to be really helpful to those of you who have questions about whether you're eligible, how we determine the loan amount, what some of the terms are with regard to fees, collateral, personal guarantees. All of that is in our really comprehensive FAQ. So I would encourage you to take a look at that. We also have an intake application form checklist. So this is going to help you if you are a first-time applicant applying for a COVID EIDL loan as you are going through the intake form process. So we really walk you through in here exactly how you would answer each question. This is going to be a really helpful resource to you if you're looking at that intake form and you're not sure, what to put in the line for gross revenues, for example, or what to put in, which owners have to be listed. That is all on this intake form checklist. So would encourage you to take a look at that as well. We then have an intake form example. This is basically just a sample of the completed intake form. So that you can, or this is a sample of what the intake form looks like. So if you want to take this to meet with other owners or with someone who is helping you with your application, you have this sample application that you can walk through so that you can make sure that you've gathered all of the appropriate information before you begin the application process. And finally, we have a portal walkthrough checklist. So after you complete the intake form, if you are deemed eligible by our system to move on to the next phase, you will get an invitation to set up the portal. And this resource here will help walk you through all of those steps from creating an account all the way through to submitting your application for processing. So really it goes through step by step exactly what you need to put in, how to enter your desired loan amount, what to expect at different stages after a loan officer has taken a look at your application. And I said all the way through processing, but actually it takes you all the way through the disbursement process. So at various stages of the application process, you are going to have to log back into your portal. So you go in, you select your loan amount, you submit for processing after you accept the desired amount. And then after a loan officer goes in and if your application is approved, you will be prompted to log back into your portal in order to, for example, sign any documents that need to be requested. This is still submit for processing. If you need to, change or if the loan officer reviewing your application changes or resizes your loan, you'll have to accept the new amount. If you are approved, then you'll log back into your portal to sign the closing documents using DocuSign. So again, this resource on our website is going to really help you navigate that process smoothly. And if you're having any difficulty even using the website resources, would encourage you to, I'm going to stop sharing my screen, would encourage you to reach out to customer service or reach out to your local field office who can help you with any issues that you're having.
Great. So I think at this point, you know, I think we have a pretty good group for if folks want to, you know, raise their hand or you know, ask some questions either through the chat or you know, over audio. I think at this point we probably can proceed to that and try to address some of the questions that folks may have on some of the content we've covered to date.
So Patrick, there's a question that came in that we answered directly, but may be applicable to others. Does a business need to own property and provide it as collateral for an EIDL loan above $500,000? They don't own property. Do they still potentially qualify?
Yeah, they definitely qualify, and you do not need business real estate collateral to qualify for this loan. But if you do have it, we require that you list it, and we will take a subordinate lien on that. But if you do not have it, you are still eligible for the program.
Patrick, here's a question we get a lot. If we have separate EINs for each location, but file a consolidated tax return under the holding company, would we apply for loans under each location or under the holding company?
Yeah, so if you file under consolidated, then you'd apply under the holding company. If, however, you have separate EINs and apply separately, you can apply for separate loans.
Patrick, can you go over SBA Form 413 again?
Sure. So personal financial statement is a requirement for loan amounts in excess of $500,000, and so the Form 413 is the SBA's personal financial statement. So any owner of 20% or more needs to fill that form out, and what that form is looking for is personal assets and liabilities. This is typically done from an underwriting perspective to evaluate the criteria of potential recovery from personal guarantors. So if you don't have any money that's liquid or have personal debt, it does not preclude you from getting the loan. It is not used to evaluate the credit criteria of the business qualifying for a COVID EIDL. It's done as a risk management strategy on the part of who's lending you money to qualify what the likelihood is if, in the event of the business going bankrupt, after liquidating all available assets for the business, what potential recovery value might exist from you as a owner of 20% or more who has provided a personal guarantee. In the case of a federal program like this one, if after liquidation and after partial repayment of the loan, and in the event of a bankruptcy, there's still a balance owed by you. If that amount is in excess of $100,000, the SBA is required to refer that particular matter to the IRS at Treasury, and there can be future recovery from the income of the business if the business emerges post reorganization from bankruptcy, or in the event that doesn't happen, from wage garnishment of the guarantors to make the government whole on its debt. So those are the worst case scenarios. And again, this loan has very generous repayment timelines. So when you get a conventional loan or a commercial loan, you'll have, anywhere from 36 months to 60 months to repay the note. And for working capital, it's typically less than that. It's usually 12 months or less, and the loan is callable on demand. But for this, you have 30 years to repay the debt after a 24-month deferment, and the rate is fixed over that 30 years at 3.75%. And so, again, while it is still debt and you need to repay it, it's very favorable terms in terms of that timeline for repayment.
Thanks, Patrick. There's another question here. If you have two entities, one owns the business and the second owns real estate, both are named in our commercial loan, do we just apply with the company owning the real estate or both if the intent is to pay off the commercial loan?
So you'd have, you would file, you'd create the COVID EIDL loan under the entity, the business entity, the operating business entity. You would list the affiliated entity, which is the real estate company. And then any debt owned and obligated to you as the applicant, that's commercial debt, the proceeds of this COVID EIDL loan could be used to prepay that commercial note.
And a somewhat related question, we have multiple locations and each one is an individual holding company for the property. We operate all locations with one operating company. If you're requesting an increase on the current COVID EIDL loan for our operating company, which doesn't own any property, I want to include property that I need to, however, the operating company does not have any property. Patrick, my understanding is in that instance, if it's the operating company that has the COVID EIDL loan that you're requesting an increase on, you go ahead and request the increase for that loan, and you just list on your collateral property list that the holding company does not own any property.
Correct. Actually, well, it does own, it owns through affiliated entities property. So you'd list those affiliated entity property because those are assets of likely the holding company likely has a majority ownership interest in the other entities that own the property. So then you would pledge those. We would take a subordinate lien on those, and you'd list those. But yes, you'd apply through the operating company entity for the increase.
All right, another multiple entity question. Our owner has several locations that all have separate EINs. Mm-hmm. Do we use the tax information from the Schedule C when filling out the paperwork for each location?
Yeah, so bear in mind that you want to use the information from the EIN for that location that you file on for that particular location application. So that's how you would do it.
All right. What are the limitations for ongoing operations while holding idle funds? Specifically, can companies pay distributions using their own operating cash flows, not the idle monies, if profits are available?
Yes.
I know that we've mentioned if an owner has over 20% a couple of times. Patrick, do you just want to, I think there was maybe some background noise during this part. Can you just go over again what the requirements are for owners over 20% in terms of them being listed on the application and then what they have to fill out for loans over 500,000?
Yeah, so for amounts greater than 200,000, any owner of 20% or more needs to fill out a personal financial statement, and then they will need to execute a personal guarantee. The personal guarantee is not, it's related to how we expect to get repaid, but it's not collateral. It's an obligation that says that those owners are going to make us whole again and guarantee that they'll make us whole again, and allows us to have recourse, as I described earlier, to get repayment in the event of a bankruptcy from those owners. So any owner of 20% or more needs to execute a personal financial statement for amounts in excess of $500,000, and for amounts greater than $200,000, every single owner, 20% or more, has to personally guarantee the loan.
Patrick, question about availability of funds. Are the additional EIDL funds available on a first come, first served basis with only limited funds available? So those who delay filing might get shut out if SBA funds are exhausted.
Yes. However, we currently have, tens of billions remaining. And so, I wouldn't delay filing a new application or filing an increase. The one thing that I do want to clarify, and Isabel went over this earlier, is that if you already have a COVID EIDL loan from 2020, and maybe you've never sought an increase in excess of 150,000, but you want to go up to 2 million now, you're going to revisit the portal and authenticate through the portal, not start a new application. You're going to seek a loan mod increase. And that's for each location that you may be applying for, that you currently have a COVID EIDL loan. If you're going to start a new application for perhaps a new location that you have a separate EIN on, and because of the changes we've talked about today, you're now able to apply for, you would start a new application for that location. But for the other location that you've received funding for previously, you would seek a loan mod on that specific loan for the increase.
One thing I'd like to speak to on that subject, Patrick, given that it seems as though we have a lot of folks in this group with entities with common ownership, is that given that we recently changed our rules and we do allow more entities with common ownership to be eligible, our system still might flag you as a duplicate entity if too many of the characteristics on your application are the same. In the event that you receive a letter notifying you that you were flagged as a duplicate entity, there are pretty clear instructions for what you need to do in that instance, but I'd like to underscore that you do need to take action in order to continue to have your application reviewed. So follow the instructions in that letter, but it will likely involve sending an email to pdc.reconsideration@sba.gov requesting a duplicate review. And again, that is a result that our system tries to flag applications that are submitted multiple times, but because we know that entities with common ownership share a lot of characteristics, we do have a team set up specifically to review applications that may have been inadvertently flagged as a duplicate. Patrick, if the company has one owner over 20%, could there be value in another owner, say with 15%, or an investor providing a personal guarantee, or is that not necessary?
It's not necessary. There would be value, and I would tell you in a normal lending situation, a lender may consider that, but it's not required here. This is a credit, no credit available elsewhere, meaning last resort program that's designed for emergency relief. So you would only list the 20% or more owner for purposes of being eligible for this program.
Great. Can you please review again, what are the eligible operating expenses that can be paid by EIDL funds other than debt payment?
Yeah, so rent, suppliers, or inventory costs, or commercial debt and mortgage obligations, payroll, Generally working capital can be used for anything that is an expense for operations. What typically working capital is not used for is business acquisitions or equipment financing. Now, it depends on what we mean by equipment financing. Like a laptop purchase would be perfectly fine. But if you have a large piece of equipment that has a useful life of, let's call it 10 years or more, you typically finance that separately from working capital. But working capital is a pretty generous definition of uses that you can apply it to.
Great. Question here trying to clarify the difference in the affiliation rules between PPP and COVID EIDL. So they're saying for PPP, affiliation rules are one way. I could summarize this, but Patrick, maybe you just want to speak to the difference between the two programs.
Yeah, so there is very little difference. I think it's easier to just say what are the rules now for COVID EIDL, and
Sure.
Perhaps that's easy. So first off, if you are in the NAICS codes that have been more impacted by COVID EIDL, for which this the reason we're having this webinar with your trade group is your NAICS code is represented. So your industry is able to apply a size standard that was created in PPP, which says that if you have multiple locations with multiple EIN and you're able to file separately across those multiple locations, you can apply for multiple locations across that common ownership as long as each location has 50 employees or less. Your operating entity does not have greater than 20 locations, and the amounts that you seek at those individual locations cannot in aggregate across that common ownership be more than 10 million. For PPP, for example, it could be 20 million. And the PPP was originally not limited solely to those specific industry segments that we identified in COVID EIDL. It was more expansive. But that I think is the simplest way to think about it is what, we've taken basically the same approach from PPP with a slight difference, 10 million in aggregate as opposed to 20 million, and applied it to the COVID EIDL program for the members of, the IAAP industry NAICS. And I don't know if you want to add to that, Isabel, but feel free.
I do not have anything to add. There's a follow-up question on the PPP affiliation rule, but maybe we can save that until the end if there's time.
Mm-hmm.
Two good questions. When can we start to apply for an EIDL loan increase? And when is the deadline to ask for an EIDL loan increase?
Yeah, so today, the actual
you can start to apply today.
Yes. Yeah. Good clarification. And then the question of when the program ends, December 31st, 2021. However, you'll recall earlier in the presentation that if you're seeking an amount less than 500,000, it takes about 3 weeks from the time you submit the application to the time you're awarded and dispersed, and about 6 weeks for amounts in excess of 500,000. So realistically, you're going to need to have applied before December 1 in order to receive your funds in December before the program expires. So it's October 7th. So you have plenty of time right now, but don't delay. Just, take the resources that Isabel went over and, get your application in either for the loan mod increase or new application.
And a question about the timeline for review.
Okay.
So,
okay.
yeah, I can actually just give an overview of this.
Sure.
So Patrick kind of made reference to this, but there are different timelines for loans under $500,000 and loans or increases that would bring the total loan value to over $500,000. So for loans up to $500,000, our current average processing time is approximately 2 to 3 weeks. So that's about how long you should expect it to take to have a loan officer assigned to review your file, request any additional documentation that they might need from you, and make a decision on your application. I will note that that timeline can be extended if the applicant does not respond to requests for information in a timely manner or takes time to turn around any forms. For loans over $500,000 or increases that would bring your total loan value to over $500,000, that timeline is longer. It is approximately 45 days. The reason for that being that our loan officers have to, there's additional compliance review required for loans of that size. So as Patrick mentioned, especially for those loans over $500,000, you want to get your application in as soon as possible because we are not able to continue reviewing and dispersing funds after that December 31st deadline. Does a reconsideration of an application submitted before the 12/31 deadline also need to be completed by 12/31 if
Yes.
it's declined first pass? And yes, the answer is yes. Let's see. What happens if the portal does not allow us to increase amounts over 500,000? That's a good question. Patrick, do you want me to address that one?
Yeah, go ahead.
Sure. So if the system believes that you are eligible for a loan over $500,000 based on the information that you previously provided to us in your original application, you should have that request more funds button in your portal when you log in. If you are requesting an increase on an existing loan, that is the way you should do it. You should look for that request more funds button. If that button's not available, there could be a couple of things happening. One, you might not be eligible for additional funds. So I would really encourage you to take a look at the FAQ, look at that question, how much can I borrow, and determine whether you really think that you are indeed eligible for additional funds. If you've already received your maximum eligible amount, that button will not be available. However, there are other circumstances that might result in the button not being available. Maybe the system has flagged there's just some additional information that we would need from you. Or as we've mentioned a few times, we had recent rules changes, so you might have been ineligible under the previous rules, but under the new rules, you would be eligible. If that's the case, you can go ahead and submit your increase request to COVID EIDL increases at SBA.gov, and I can drop that email address into the chat so that everyone has it. Again, I would encourage you to take it's COVID EIDL increase requests at SBA.gov. I would encourage you to first take a look to determine whether you think you are indeed eligible for more funds. But if you believe you are, you can submit your request via email to this email address. Please make sure to include your application number in that request. I know that we are coming up on time. Patrick, is there anything that you want to say as we close out today?
No, just thank you, for the opportunity and hopefully this was helpful. And again, hopefully this will make an impact for your business and you can find additional information, with the resource listed here. And don't hesitate to reach out through your trade with any questions and we'll get the answers as quickly as we can.
Hey, Keitha, you're muted still.
There we go. Thank you, Raina. First and foremost, I apologize for the technical difficulties. We recognize how important this program is to you, If that hurt your ability to get the information you need, we did record this presentation, and we hope you will go back through it on your own time. Again, our sincere apology for that. I want to thank our panelists for joining us today. We appreciate your time and the information, particularly involving the Q&A. It was very thorough, and we appreciate all of your questions for the attendees. Again, as I mentioned at the start of the presentation, please email me if you have any questions or if you'd like to sign up for our weekly public affairs update. You can reach me at kstevenson@iapa.org. I dropped it in the chat and I circulated it to all of you if you'd like to just copy and paste it. I know you'll find the information to be timely and informative, particularly given these times. We also want to learn if there are other specific webinar topics you would like us to consider. I know we're doing the same internally. We'd like to get a regular flow of webinars in addition to things like this that pop up from time to time that are of interest to you. We hope this program provided value, and we appreciate you taking the time to participate. And we just want to wish everybody enjoy the rest of your day and have a good rest of your week. Thanks, everybody.